Hi, this is Kerry Artak with Wicked Stocks, bringing you the weekly DIA report, that is the Dow Jones Industrial Average ETF, for the week of Monday, February 7th, 2022. Before we look at the DIA charts, I just want to encourage you once again to please click like each and every time you watch the weekly DIA report or any content that is uploaded by Wicked Stocks to the Wicked Stocks YouTube channel. It does help us out a great deal, and I do appreciate any likes because that means the word is getting out. You know, YouTube actually gives you kind of a step up, if you will, with regard to the algorithms and being found if you have more likes. Also, subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the weekly DIA report. And so seeing it early before the opening bell on Monday for the weekly DIA is to your advantage so that you can use it for your trading and analysis most effectively. So let's take a look at the charts. We'll start with kind of a bigger picture. We tested that 334.61 long-term channel bottom a couple of weeks ago. And, you know, this kind of says a lot right here, this image. I could tell you kind of the longer term and the midterm in one shot. You know, longer term, holding above 334.61, this market can continue on to new highs beyond 369.31 and up to the 411.77 channel top in the months ahead. Now, it's not going to happen anytime soon, but it certainly could happen by the end of the year, especially if we close above 369.31, say, by the end of March. Then we may be as little as 3 to 5 months away from reaching that 411.77 rising channel top. So that's kind of the bigger picture. And last week we also settled above that former channel bottom that this week is at 344.68 after having closed just below it actually 3 weeks earlier. We did actually close above it the previous week, and we got some follow through last week. And so we are firmly above it. The previous week, we settled above it, yes, but what is once again inside the 1% margin, which meant it could kind of go either way. But we did get upside follow-through recovery. We firmly clearly settled above 344.68. We also settled above the high of the low that was put out the previous week at 348 even. So this is a zone of support for the week, and above which I do think the 369.31 horizontal channel top is in reach, possibly in as little as 2 to 3 weeks. It could take longer. On the way up this week, we do have 362.50, so that's where it could take longer because there's a lot going on even in the low 360s. We could top out at 362.5 not only for the week, but even into late February and fall back into the mid 340s again, which I showed in the previous slide. But if we close above 362.5, then we're probably just a week away from testing 369.31, where we can top out on a quarterly basis. I'm going to say we could top out there into March, April, May, perhaps. You know, there's a lot of precedent here for consolidation up in this zone. We even had a buy signal a month and a half ago that obviously failed when we came cascading back down in the month of January. But 369.31 should be respected for its ability to contain, I'm going to say, at least monthly buying pressures. But I do think that you know, we're still in a long-term bull market by several measures. Most notably on this chart, you can see above 334.61. That is a 2-year rising channel bottom, thereabouts. I mean, that was the first low there on the far left was March of 2020. So we're almost in March of 22. And so holding above 334.61, you can say this market actually remains bullish for the year, and we're just above it. And then closing above 369.31 is what I call kind of the peel away factor, where the market really doesn't look back and just keeps forging ever new highs over the months to follow, that 411.77 formation rising weekly, then anticipated in due time. Let's cover the downside again. If we close the week below 344.68, we should retest next week the 334.61 formation. I mean, if it gets ugly this week and we close below 344.68, say on Monday, we could test 334.61 within the week. And that again can contain quarterly selling pressures, possibly into later year. But if we do close below 334.61, and I've shown this image in recent videos, this is the same formation, but we're looking at a chart that goes back some 13, 14 years, even longer. Then, if we close below 334.61, we continue south, possibly in as little as 2 to 3 weeks, given the heightened volatility that I would expect to, comprise the market at that time. 317.10. Within probably 2 to 3 weeks of closing below 334.61. 317.10 is a former long-term channel top that we settled above over a week ago. Over a year ago, and that indicated longer-term bullish continuation, like over the course of the decade, because of the longer-term framework of that channel top at 317.10. It spans 10 years at least, and so there you have it. If we close below 334.61, 317.10, a 2 to 3 week target, where we could quite easily not only bottom out through the rest of the year, but even through the rest of the decade, and from there push on to new highs in the months to follow, likely before the year is out. I think that pretty much sums it up for the weekly DIA report. Please click like each and every time you watch it. And subscribe to the Wicked Stocks YouTube channel if you haven't already. I will be back next week for another edition of the weekly DIA report. You have a great week, and we will talk soon.